Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, and on today's episode, I have Cole with me. Cole's from Move Health. He has a deep passion for creating empowered and informed healthcare consumers through effective healthcare planning. He co founded Move Health to help solve a problem for his in laws. And I know we've talked about that story in the past. Maybe we'll have time for it today. But we connected because of his amazing work for advisors and helping them integrate better into their practices correct healthcare planning for their clients, because it's a common area that everybody has to deal with it. But are you really going to spend the time to develop an expertise on it? Probably not your best and highest use. So thanks for coming on to the show, Cole. I appreciate you taking the time.
Yeah, thank you for making some time for us at Move Health, and for me, Catherine. I've gotten to know you a little bit. We've been kind of running in similar circles, on LinkedIn and things along those lines. And so, good to finally get some time together to engage here. And yeah, I think you're spot on. I mean, what Move Health does, we work with forward-thinking financial advisors to help solve for healthcare planning. So your clients are coming to you with health insurance and Medicare questions, and most advisors are under-resourced and under-equipped to really handle those questions and go deep on them. So that's why we started Move Health. And I can always tell the story of my in-laws that sat down with their financial advisor at 59 years old and said, "Hey, we want to retire. We just had a grandbaby. We were excited about spending more time with him. What does retirement look like for us?" And the financial advisor said, "Well, hey, you're diversified. You've got funds in the right place. The house is paid off. The kids are through college. You've done all the right things. Hey, let me pull up my financial planning software to get a number for health insurance. Kind of the last thing we need to plug in to place." And they told my in-laws that health insurance was going to be $28,000 a year.
Mhm.
And my father-in-law, very quickly said, I guess I don't hate my job that much, and was prepared to work for 6 more years because of health insurance. And so we're coming up into enrollment periods and things along those lines. We can talk a little bit more about that, but advisors are sitting across desks from clients every day, and either giving them not enough information around healthcare planning, or they're giving them not willfully, but they're giving them incorrect information around healthcare costs and those things. And so that's what we set out to solve at Move Health. So we've got a full end-to-end solution where we help advisors to both proactively bring up the conversation with healthcare cost analysis, but then also giving them a team of experts on our team that can actually help to implement and strategize with clients too.
Yeah, that's awesome. So I think a good place for us to start the conversation is, we're recording this episode end of October. We're going to be
Yep.
pushing it out pretty shortly, just because I know we're coming into enrollment periods.
Yep.
When so for advisors who are listening to this, who maybe have some, maybe they don't have a lot of clients that we're dealing with Medicare planning or things like that,
Mhm.
and they're not as involved on the healthcare side. What are some things that they should be aware of in terms of deadlines or things that they need to be thinking about before the end of the year for their clients in terms of, some health planning?
For sure. So you just mentioned it. We're end of October right now, October 30th. I know people don't like to put dates on these, but October 30th is when we're recording this. And, we're coming up on the beginning of the Affordable Care Act marketplace, the ACA marketplace. The open enrollment period for that begins on November 1st. So I'm going to talk about pre-65, and then I'll talk about Medicare dates. So November 1st starts the pre-65 Affordable Care Act marketplace open enrollment period. This is when you need to review coverage. This is when you can make a transition to the marketplace. This is when you're making new forward-looking estimates for those advanced premium tax credits on the marketplace. So you need to arm your clients with their modified adjusted gross income to understand when they're making an estimate for those tax credits, what income to put into their application. So advisors, that's an important thing to note. So that starts November 1st in just a couple days, and that will run all the way through December 15th for January 1st effective dates. So they need to have that taken care of before December 15th. If they don't, they will then be forced to take care of it before January 15th, which will then get them a February 1st effective date. So to avoid any gaps in coverage or being switched to a plan for a month that you don't necessarily want, et cetera, best to just get that taken care of between November 1st and December 15th. That's pre-65. For Medicare, the Medicare annual enrollment period, or AEP, not to make things even more confusing, that actually began on October 15th, and that runs through December the 7th. There are a couple kind of critical things that it took place for Medicare moving into 2025. The first and biggest is that, Catherine, I don't know how old your parents are, if you've helped them transition to Medicare yet or not, but The famous donut hole, if you are familiar with the prescription drug coverage donut hole, it's when you went to catastrophic coverage, et cetera. Drugs got really, really expensive. The donut hole is now gone for Medicare beneficiaries. And there's now an out-of-pocket maximum for prescription drugs that is $2,000. This is huge for folks that are on expensive brand name drugs and are on Medicare as well. It's going to save them a lot of money. So what I always say is if there was ever a year to make certain that your clients review their drug coverage, it is this year. So if they review nothing else but their Part D coverage, you are doing your part as an advisor. So those are that date to do that is from October 15th through December the 7th. And that's a huge piece for for Medicare beneficiaries as well.
Yeah, that's great. And I think do you have advice for advisors when they're considering, you know, bringing this planning into their process, their year-end planning process? What are some recommendations that you have of, ways to implement, if they don't already have this as part of their process, what they should be thinking about, and then maybe some, questions that are relevant for this year, or, just questions that you think are good in general for them to implement in that?
Yeah, great question. I think that most advisors don't have this as a part of their current process, year-end process. You heard me mention we work with forward-thinking advisors. It's something that's kind of on the up and up, just like tax planning, just like estate planning. There's now kind of this third leg to the stool, if you will, that is healthcare planning, and it's becoming table stakes for clients. Right? They want healthcare planning advice. They want to feel like they're walking into a family office. And so my advice for advisors that don't currently use this as a part of their year-end planning process is just start bringing it up. You'll be amazed what your clients have to say when you bring it up. Right? You're going to be amazed that they said, "Oh my gosh, that's such a pain. I've had to navigate it. I've figured it out for the past 4 or 5 years on my own. Do you know anybody?" Right? Just start bringing it up and you will understand what the need is more fully. And then I would say, whether it's Move Health or you've got a really great local broker or you've got someone that you know and trust in the space, engage with them, right? Understand how they can work into your year-end planning process, when clients need to engage, what timelines look like, because those can differ from place to place. We like to start the enrollment period checklist. We like to start that a couple months before the enrollment periods actually happen, so we can gather data on a client, and then just be ready for when the enrollment period happens. It's quick, painless, and easy. So, first takeaway would be start bringing it up. Proactively bring this up and make certain that you're touching on it. Your clients are concerned about it. A recent nationwide, the insurance carrier, a recent nationwide retirement study survey said that 62% of Americans are terrified of what healthcare costs will do to their retirement plans.
Yeah, that statistic sounds right.
Yeah, I would say it's probably low, even if you engage further, especially for folks that are in retirement. We see it all the time where people say, I'm terrified of what, Medicare changes are coming up, or what's going to happen with my health insurance, but before I hit age 65. And so, having a resource and as an advisor bringing that conversation up proactively can put a lot of nerves at bay for clients. Just say like, hey, we've got a resource in this space, or we're going to tackle this together, right? So start bringing it up, and then after that point you need to start vetting what resources are available to you as an advisor. And I will tell you, there aren't a ton of them, right? There aren't a ton of them that are out there that are specifically focused on serving advisors. We're one of the few. There's maybe 2 or 3 others that are out there that you can vet, and you should vet all of your options. Make certain you understand what those are. So bring it up, understand what your resources are, and then understand, how many of your clients can really benefit from this, right? So there's several different milestones that you can look at for healthcare planning, right? So one of those, namely being, hey, do I have people that are, anybody that's retired is likely buying their own health insurance or Medicare coverage or whatever that is. They're likely going to benefit from making certain they're making the right decisions. So that would be anybody that's, retired pre-65, anybody that's retired post-65, anybody that's, 64 and a half. We at Move Health like to say at 64 and a half, we want our advisor partners, reaching out to their clients and saying, hey, upcoming transition, you're going to get a ton of postcards, you're going to get a ton of mail, you're going to get a ton of phone calls. Like, ignore them. I've got a resource in the space. You can throw all of that out. We're going to get this taken care of together. And so, looking for those milestones. Anybody that's in a distribution phase of their accounts, that's kind of an early telltale that they are in a position where they're probably buying their own health insurance. So all things that an advisor knows when you begin to put two and two together. But healthcare planning doesn't have to be something that takes a lot of lift for an advisor to integrate if you have the right partner on your side.
Yeah, and I think another key point that I've encountered really often in my career, that's another place that, as an advisor, you can provide values. If you have clients who are employed but maybe not happy at their jobs,
Mm-hmm.
a lot of times people will stay just because of health insurance. And so something that can be a really big value add is to actually help them through the process of like, well, if you like, what would this actually cost you comparatively if you had to pay for it on your own? Or like if you have a client who's thinking about becoming self-employed,
Yep.
or they want to make a job switch and maybe the benefits aren't going to be comparable. It's like, well, if you can make this job switch and you're going to
Mm-hmm.
get something of a pay increase, and you could maybe pay for your own health insurance, like there's ways that you can get around this where this isn't going to prevent you from moving on in your life. And so it can be a good conversation too, even for people where it's a client where, they say that, oh, well, I have it through my employer. It's like, well, is it good? Like, are you happy with it? Are you happy with that job? Like, what's going on in your life?
Mm-hmm.
And so it doesn't just have to be for those, people that are actually in the open market already. I hear like I've had that so much during my career. And I don't know if you've encountered this a lot on your side too, of just people where they will stay in jobs that they hate just because of the health insurance.
Yep.
Because they don't know how to fix that. They think they're trapped. And in reality, they're not. Like they could do they could do one of these plans. They might be eligible for one of the tax credits
Mm-hmm.
related to it. And it just, people, it can be a life-changing value add, even for those non-retiree clients.
Yeah, I think that, for a lot of people, the one that we see most often is someone wants to start their own business, or they want to go 1099 in their role and just be a consultant, but
Yep.
they're currently getting W-2 benefits through the same job or whatever it might be. And so they're saying, and that's why we called ourselves Move Health is because it's very purposeful. We help people move from one phase of life to another confidently. And listen, we fear what we don't know. That's just a very normal human thing. And if we don't know what the other side of, leaving a job looks like, well, guess what we're going to do? We're going to stay. We like homeostasis. We like to be comfortable. And so those are the types of things that we love engaging in, are scenarios where someone's saying, hey, can I retire early? Can I start this business? Can I make a jump into 1099 where I think I can make a lot more money, but I don't know what health insurance looks like, and I've got a young family, whatever that might be. Those are situations that we love engaging in, because you kind of get that light bulb moment for a client where they go, check, I actually can do this. And their advisor has been behind them the whole time saying, yes, you can do it. But this is kind of like the last thing that allows them to, conceptually get along with the idea of like, oh, I can do it. We treat health insurance as a boogeyman a lot of times, just because we don't understand it, right? Statistically speaking, in the US, people do not understand how health insurance works. If you sat in a room with 100 people and said, raise your hand if you know what your deductible is, you'd have less than 20% of those people raise their hand, which is crazy considering what impact health insurance has on all of our decision making. You have people that forego, we're talking about foregoing life changes. You have people that forego seeing the doctor because they don't understand how much it's going to cost, and they just assume it's going to be really expensive. So make certain advisors that your clients have an understanding of what their healthcare costs actually look like. And so if you need help engaging on how to read a summary of benefits, or you need help engaging on understanding what a risk exposure on health insurance looks like for a client, so you can help to put those things at ease for a client, engage us at Move Health. We're happy to make that, clearer for you, and ultimately clearer for a client, so that they have more confidence in whatever is next for them.
Yeah. And that's such a good point with the, people make health insurance a boogeyman, because I get the same thing on the tax side all the time, where it's because there's something in the mental attitude of too hard, I'm not going to engage this. Then people just make these decisions that don't make sense because they're just too afraid to actually try to figure it out.
They lock it in the closet and they say like, "Ooh, I don't have to think about it if I can't see it," right?
Yes, yeah, and it's like, in reality, like, it's not that scary. You just need to work with somebody who understands what's going on,
That's exactly right.
and make the right move. So, I guess one other thing that's probably, worthwhile to bring up too for advisors who are listening to this is, okay, so that's the case for my clients. Probably the case for yourself too as an advisor. Like, if you're running a small solo practice, like, what are you doing for your own health
Right?
benefits? Also, on the flip side of, what are you doing for employee health benefit plans and those kinds of things too? Because
Yep.
it's a real, in terms of like tax savings, there's a lot of really great tax savings and tax planning techniques around how you're doing your health spending, especially if you're an employer, and you're self-employed. There's ways that you can, get better benefits out of those things. And then, if you're spending money on health expenses and medical expenses, there's better ways to maneuver those. In terms of, from the perspective of the advisor as a business owner and for
Mhm.
themselves and for their employees, are there recommendations that you have for them to be considering around like how they should be approaching these kinds of, decisions for themselves and like for, employees that they have in the firm? Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So, I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So, if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently, all my top tips to unlock six-figure savings. Thanks, and keep enjoying the show.
Yeah, it's a really good question. There are, with some recent legislation, there are some new things that smaller employers can do. And this wouldn't just be an advisory firm, but if we are talking specifically about an advisory firm, maybe you've got a lead advisor, a paraplanner, and maybe an admin and a client service team member, right? So you might have 4 people, and maybe if all 4 of those folks need health insurance coverage, I would still, and this is a bit of a hot take here, Catherine, but
Mm.
I would still not say a small group health insurance plan is almost always cost prohibitive
Yeah,
at that size of a business, right?
that's what I've seen too.
You've
Yeah.
got folks that are, over indexing on we need to offer health insurance, and then they're spending, as a business, they're spending, five, six, $7,000 a month on getting 4 people covered.
Yeah.
That's a big bill. And when it's small group, you're typically, you're that small, you're typically getting, a higher deductible plan, a quote unquote worse plan. It's not a worse plan, but it's a higher deductible plan, maybe a higher premium, and your employees are probably paying more for it, right? So a lot of times what we see small employers do is we can do a couple of different things, right? So there's ICRA, ICHRA. If you're familiar with that, that's a way that an employer can give tax advantage dollars to an employee to pay for specifically healthcare reimbursement. So
Hmm.
health insurance expenses. So that's an option. The other one that you can do is a supplemental wage increase. So you can just wage your team up and say, hey, go buy health insurance. I'm going to wage you up by X amount. And then your client or your employee can still use the advanced premium tax credit on the marketplace if that's a fit for them. They have some optionality and choice in where they want to go. And so, what I say is for small employers, very rarely does a small group health insurance plan make sense. There are organizations that do ICRA administration. There are obviously ways to do the supplemental wage increase that makes sense. So there are a lot of, ways to do that. And you don't just have to say, hey, we don't offer health benefits, right? Like you don't
Yeah.
have to do that. There are ways around it where you can say we offer a stipend or we offer an ICRA or we offer whatever it might be. And it's still going to come out way ahead of small group health insurance plan costs.
Yeah, absolutely. And it's funny that you say that because in a lot of the like smaller firm environments that I've dealt in with clients, that's something where as part of when you're onboarding employees and also being attractive to employees in a small
Mhm.
firm environment, having that as part of the the conversation with people before you make an offer to them is just, our benefits can be, it's adjusted to what you need. Like, I've done that for myself in the firm in the past of, do you need health insurance? Yes or no? Okay, what's the most efficient way to get you what's actually going to be a good serve you and your family well. Like,
Correct.
is this something that you think you're going to use a lot? Do you need something that's lower deductible? Do we want to try to set up a reimbursement plan and you go and get something in the marketplace? Or do you want me to just do a higher base wage because you're going to be able to get a good premium tax credit?
Yep.
Give them the option. But it's a conversation that you should be having with prospective employees and with current employees. Like when you're going to do your year-end reviews with employees, if maybe they're getting insurance through a spouse and that insurance isn't actually very good for them, is there a way that we could make this better? Because it's one of those pieces, on the flip side of where, that piece of conversation earlier, a lot of people will stay at jobs that they hate for the health benefits. Like they
Uh-huh.
will do that. And
Yep.
so as an employer, that is something that's in your arsenal that you should be aware of, right? Like if you
For
want to
sure.
be able to retain talent, you need to pay attention to this as a benefit for your employees and have a plan around it and do something with it.
Yep.
Because if you have really talented people, like it is going to be like kind of a almost, there was an experiment where they had ants walking around and if you draw a Sharpie line around the ant, it won't go past the Sharpie because it thinks it's a barrier.
Yep.
And then once it does, then it won't work again.
Correct.
But, with people with health insurance, that's employees with health insurance, it's like that, right?
Yep.
Like
Yep.
they see it as like an invisible barrier instead of
Invisible
just,
barrier.
okay,
Yeah,
yeah,
I've heard it referenced as like golden handcuffs before, where it's like, man, I've got really great benefits. I don't want to leave and have to go get, health insurance on my own because it's not going to even compare to what I've got at my employer. And reality of it is that, sometimes that's true.
yeah,
But the reality of it is, that shouldn't be the thing that's like either keeping you at an employer or something
yeah,
that's like, deterring you from making a next move. So
yeah, absolutely. But I guess on the flip side is just if you're the employer, realize that this is how
for
people
sure.
are. And
Yep.
so, being cognizant of, uh, you know, giving those kinds of benefits and giving thought to it so that it incentivizes people to want to they feel like they're well supported, and also that they're being in the integrated, and that you're taking you as an employer are taking that step with them of, I care about you beyond just your productivity with me, like
Correct.
what's going on in these other areas of your life, and I want to make sure you're well supported
Hmm.
with something that usually a pretty easy arbitrage. Like you're able to still deduct these things as an employer, like you're getting a tax write-off for it. The employee probably feels better served with that conversation and setting something up like that than
Hmm.
maybe a pure pay bump, right, instead of a
Yep.
bonus. Like
Yep.
these kinds of things communicate a level of care to them that just cutting them an extra bonus or something maybe wouldn't. But
I think, and Catherine, I think you like really hit the nail on the head for also why advisors should bring this into their practice for their clients. You
mhm,
just communicated that very eloquently on both sides, right? So not only could it be a total game changer for your employees if you're a small firm, it also can be a total game changer for your clients in taking your advice to a new level of care of saying, hey, I'm not just your investment person. I'm not just the money person. You don't just like me when markets are high and hate me when markets are low, right? I'm thinking about every part of your financial, journey, right? I think about my wife and I were working through buying a house recently, and
mhm.
guess what I did? It didn't make my financial advisor any money. I picked up the phone and I talked with him for probably 2 or 3 hours over a period of a couple of weeks, specifically around buying this house. And did that solidify the fact that I'm never going anywhere else but working with my advisor? Yes, 100%. Why?
Yeah.
Because that earned him no dollars, but it was something that really meant a lot to me and was a holistic part of my financial plan. And so same thing goes for healthcare planning, health insurance and Medicare planning. Your clients are concerned about it. Your clients are thinking about it. There are so many statistics that back that thought process up. And you can do something about it. And it doesn't have to be something where you have to learn a whole bunch of information, but you can implement with a partner rather quickly, and it can make a big difference for your clients and your employees. So,
Yeah, absolutely. No, and I love that piece because, in the wave of where I see things going in the market, it's relationship, right? It's like that's how the younger generations are making these choices too. And
yep,
the more that it can be about relationship, it's not that you have to provide this service. It's just that you even check in about it.
yep,
It makes a huge difference. Cause like I have the same thing with my clients. Like I work for advisors and
yep,
I still ask them like, how do you do your health insurance? Like,
yeah,
what's
yeah,
going on with that? Like, does that work for you? Like, what are you doing with it? Because even though I'm not going to do anything,
mhm,
I'm not going to do anything about it. Just the fact that it's a part of their life that you want to have somebody else in the cockpit with you. And I think for most people who work with advisors, most of the time that's the mentality. It's like, I just want somebody else in the cockpit with me.
Yep.
Like
Yep.
that sees the other facets of life that I might not be aware of. And
Hmm.
like you were saying, the estate planning, the tax planning, the healthcare planning, like those are
Yep.
huge components that even if you can't move the needle forward, they want to know that there's another smart person in the room with them as they're making these decisions.
It's exactly
Um,
right. I think in
yeah.
the season of AI that we're in, like authenticity is going to be the thing that wins every time. And that's a whole different podcast. Like we could go on for
Oh
hours
yeah.
just about that. But yeah, you're spot on. I think that it's a non-investment value add that is, super low lift, very high impact for your clients. They're concerned about it and something that we should be thinking about for sure.
Yeah. And especially too, like as an advisor, like there is a value add to you too. Like makes the client stickier. But
Yep.
then on top of that, if they're spending less money on healthcare,
Hmm.
they're better served. Like that's more assets for you to manage. Right? Like,
Sure.
and if you
For sure.
extrapolate that across a whole portfolio of households, that's significant.
Yep.
So even just from a monetary return on this, beyond just the non-quantitative, like this, I think at scale, this is something that would produces a monetary return for you as an advisor too. But connected with you, Cole, and the
Mhm.
work that you and your team are doing, where are the best places for them to reach out?
For sure. So this is easy. Movehealth.io is our website. You can check that out. There's, advisor, client resources, et cetera. Everything you could possibly want on there. There's ways to, schedule some time to demo our platform, what we do with advisors, learn more about us. There's also some great videos on there, et cetera, to check out. You can also just find me, Cole Craven, on LinkedIn, and would love to connect with you, engage there. I like to think my wife thinks that my posts are funny sometimes. So I like to think that I try to engage there. But I think, if I had to like sum up the conversation, it would be, know that we are in enrollment periods right now, right? So October 15th through December 7th for Medicare, that is happening right now. This is time of year to review Part D coverage, Advantage plans, just a good time to review your Medicare coverage. And then the ACA marketplace open enrollment period starts on November 1st and runs through December 15th for January 1st effective dates. So those are like big takeaways. And then just knowing like integrating healthcare planning with the right partner does not have to be hard. In fact, it should be easy. And if it is hard, then you maybe should find a different partner. So all of that to be said, this has been awesome, Catherine. Thank you for making some time for me.
Yeah, likewise. Thank you so much for joining me, Cole. And for those of you listening, those links will be nearby wherever you're interacting with this. So this was any final thoughts before we sign off?
Yeah, final thoughts. I love this question because I don't, it's always kind of a wild card for me. But I think my final thoughts would be, there are too many ways to, as we think about health insurance, right? We talked about we fear what we don't know. Um, there are too many ways to get good information nowadays on health insurance and or Medicare for us to fear it, right? An
Mhm.
informed and empowered healthcare consumer is someone who is going to feel informed and empowered about whatever their next phase of life is as well. And so don't let health insurance, don't let the transition to Medicare, whatever that might be, don't let it hold you back from what you want to do next. Find someone that trust, and that can help guide you through this and learn and become an informed and empowered consumer. That's for both advisors and clients that might hit this as well. But for advisors, just make certain that you understand that this is something your clients care about, and it's something that you can do to engage with them on a deeper level.
Yeah, that's great. Well, thank you for joining me, Cole. And for those of you listening, this was another episode of the Financial Advisors Want to Know podcast.